This is Chanel Bunger with the Becker Private Equity and Business Podcast, and I am excited to speak with our regular guest, Matt Wolf, who joins us weekly to share an update on economic trends that he's keeping an eye on. Matt, thank you as always for joining me today. Why don't you take it away and tell us about some of the things that you're seeing out there?
Yeah, thanks, Chanel. Happy to talk. There's been a lot of economic data this week, right? We had the FOMC non-decision to leave interest rates unchanged, which was widely expected by the market. In addition to that, we had initial jobless claims increase, kind of actual helpful sign of a little bit of slowing in the labor market, a little bit of an improvement in sort of the inflation outlook, which should help support an eventual rate cut. We expect that the Federal Reserve will eventually cut rates consistent with what we've seen from the Bank of Canada and the ECB. We expect the Bank of England to do so soon as well. Interesting that they aren't all following the Fed, which is how previous cycles have gone. So it kind of speaks to some of what Scott and I have discussed in prior weeks about some of the shifting and reglobalizing of the economy as we kind of see other central banks leading the interest rate cut change, not just the Fed this time as it has been in prior cycles. But this data that we received this week mostly kind of supports again this claim that overall really the economy is strong. Inflation is slowing. Again, we expect to see some rate cuts later from the Fed later this year, presumably in September. Probably the first one, at least based on the data we see now. As we look back too, just over the past few months, our own sort of financial conditions index, which we've kind of created and used to gauge overall financial conditions, has been positive since January. Right, we're in positive territory. We are also forecasting for the next 6 quarters, next 18 months, 2% real GDP growth, right? So 2% GDP growth above inflation, which that'll be the rising tide that lifts all boats, so to speak. And so we're very bullish on the overall economy. We think we're in a good spot. There is still a lot of hesitance to make investment, right? There still is, at least in executives' eyes, there's a lot of uncertainty around the future path of the economy. And certainly there is, right? Just because we're projecting kind of our base case doesn't mean there isn't uncertainty around timing of rate cuts, other factors, geopolitical risks, right? It still is a difficult time for executives and investors to make those investments, to put that money at play. We are seeing investments, we are seeing deal flow, albeit cautiously, and we expect that to continue going forward. That whenever the first rate cut does come from the Fed, we expect that will be a bit of a watershed moment and will unleash some investment and some deal flow. But we'll see a little bit of an improvement in executive confidence as we get closer and closer to that date, right? As we see, okay, we're now expecting this action or that action, in a month rather than 5 months, right? So as we get closer to certainty and some of that volatility, variability, and uncertainty evaporates from the economic conditions, then we expect to see more of those dollars being put to play, more of those dollars being invested, because there still is a lot of dry powder. There's a lot of cash on balance sheets of companies that is sort of waiting in the wings. And we see signs of strong economic performance going forward. We've been in a strong economic environment for some time now, despite a tighter monetary policy. And as that monetary policy eases and as investors and executives get a little bit more certainty on the future path of the economy, on the future path of the regulatory environment in which they're working, maybe a little more certainty on geopolitical risks if possible, then we expect to see more and more of that investment coming into the economy, right? Investment in terms of not only merger and acquisition activity, but just building new plants, hiring more workers, like whatever that looks like, right? Putting those dollars to play again to capture this real GDP growth that we're forecasting. But many investors, many sponsors, many executives are still a little hesitant just to make those investments, just again, given the uncertainty surrounding the current level of economic conditions, even though they are generally good. Having strong kind of growth economic conditions isn't the same as having certain economic conditions. So we'll see how that develops. That's something we watch very closely, look at every day. But we're optimistic that over the next few quarters, we'll see some of that uncertainty ease. We'll see some of that investment start to flow, and capture again that real GDP growth that we're expecting for at least well, not at least, but we're expecting right now for the next 6 quarters.
Perfect. Well, Matt, I want to thank you as always for keeping us updated on all these trends and for joining me on the Becker Private Equity and Business Podcast. Looking forward to next week. Thank you.
Thank you.